Good morning, everyone, and welcome to Thursday morning. It's Stephen Whiteside here from the uptrend.com. Well, what do you know? Today's a snow day. The schools are closed. It's actually beautiful out there. It's nice, fluffy snow. As long as you don't have to drive or go anywhere, it's pretty incredible. The dog and I were out there earlier. The newspapers were delivered on time, so everything seemed to be quite normal. We have a great toboggan run across the bridge on Broadview, and yeah, it's going to be busy today. And I wish I could be there, but I'm not doing well these days. Tomorrow morning. I'm back at the physiotherapist. I have trouble sitting. I have trouble standing. My favorite position right now is to lie flat on my face. And that's where I get the most relief at the moment. So tomorrow morning, no video. No matter if it's a snow day or not, we are not doing a video tomorrow. We'll be at the physiotherapist. Now, in the pre-market this morning, the Dow's down a little, but notice the Nasdaq. The Nasdaq's coming back and really undoing the losses from yesterday. We'll see if that sticks, but that's what's happening in the pre-market this morning. Now, here's something funny. The iShares for the TSX 60 and the Vanguard Canada ETF were both up 2 cents on the day on Wednesday, so no big moves there for the Canadian market. Now, looking at the US market, and the other day I was showing some charts with some the next price targets that we could hit. For the Dow Diamonds, we were looking to see if we could move up to the $500 level. For the SPY, you can see we're stuck at our price target, but above that, before the next price target, is a big round number of 700. And that is certainly something the market may want to hit. It's not going to do that on Thursday morning. Then for the Nasdaq, we talked about the fact that, yeah, we have another price target right above us. We also have an open gap that hasn't been filled yet from back in October, and that could be a potential target to the upside for the Nasdaq. So, we talk about the fact that the S&P 500, the TSX, has been making new all-time highs. The Nasdaq has not. So the Nasdaq is a little out of sync with some of the major indices. Looking at semiconductors, we're stuck at our price target, but just above that is the $400 level before we get to 406.25 on the SMH. Now, there's lots of other sectors I could be watching closely right now. Financials, for instance, already broke down. The banks are still holding up fairly well. They ran up to our target of $64.06 and reversed from there. No major breakdown yet. That would certainly be something we talk about if we broke down below the late December low for the banking sector. Right now, we haven't done that, so no warning signs so far. Now, of course, we always follow the VIX closely, and it popped yesterday, and we've got a buy signal on the VIX ETF, and we talked about being stuck here at the 1563 level. We moved up yesterday. Still not, we still haven't broken out above the moving averages. We ran up to the 200-day moving average yesterday and stopped. The VIX is still a mixed signal. I'm taking the buy signal in the VIX ETF, and we'll see how long we can ride it out for. Of course, the VIX, it usually pops and moves up quickly, so you want to be unloading and selling into any upward movement in the VIX as quickly as possible. You could see that, the VIX could certainly run back up to the $28 level, but that could only happen if we start breaking out above the 200-day moving average, which has not happened yet. Now, Bitcoin has been the big winner recently, and there it is making a new high for this move. And of course, we're always looking for it to run back up to the $100,000 level. It got as high as $98,210 yesterday. And of course, the bull ETFs are back on buy signals. They've been on buy signals for over a week now. Of course, the bear ETFs are on sell signals. You don't want to be short the Bitcoin at this time. And then here's the major stocks trading on the TSX. There's Bitfarms, there's Galaxy, there's Hive. And of course, we've been watching Hut 8 make new highs this week, and it is up at the top of our daily projected trading range of 87.50. If we go to the weekly chart, the next target to the upside is $100. So that could certainly be where Hut 8 is heading if it starts breaking out above 87.50. Looking at the Canadian market, what worked yesterday, well, was the energy sector, which is going to see a pullback at the open this morning as crude oil has come back $1 or $2 in the pre-market. Then we've got materials, and then down at the bottom, it is the infotech sector was the big loser, and that had a lot to do with Shopify, which rolled over yesterday. It was down nearly 6% on the day, and it came down and sat right on our price target of 218.75. It closed at 218.61. So that was a big move for Shopify yesterday in the wrong direction. Looking at the energy sector, we made a new high for this move yesterday for the TSX Energy iShares Energy ETF, breaking out above the recent highs. It's going to pull back at the open. Then the price of crude, of course, made a new high yesterday. We're trying to get to 62.50. We almost got there yesterday. And then we're pulling back in the pre-market this morning. Pulling back, of course, is going to take some money out of the sector, but it's not a major breakdown just yet. Now, natural gas was down on the day. We're having trouble getting natural gas back up above $3, clustering around the 273 level. And if it starts breaking out above $3, that would certainly be a bullish sign for natural gas. Looking at the world of mining, there's copper making a new high yesterday. Gold was up on the day yesterday. It was up $36. I see it's down $16 last time I looked. There's platinum up on the day yesterday, and then everybody's talking about silver making a new high on Wednesday. There is the TSX Global Gold ETF also making a new high on Wednesday. And then we're looking for a move up to 62.50. That is our next target to the upside. The high yesterday was 59.74. So, of course, $60 would be psychological resistance, and we're looking to see if we can get over that. With gold pulling back a bit on Thursday morning, not expecting a breakout above 60 on Thursday. Then looking at Barrick, there's a new high for Barrick on Wednesday. There's a new high for Agnico Eagle before pulling back, and Agnico Eagle running up towards the 281.25 level yesterday, and we're just a couple of dollars away from hitting that target. And of course, we pulled back from the high of 279.89 on Wednesday. Looking at Canadian banks, no major changes. There is the Bank of Nova Scotia trading down to the lower channel line yesterday. We've got the Bank of Nova Scotia trading in the water. We've got CIBC trading in the channel. We've got a sell signal for National Bank. It's been on a sell signal for a couple of days now. No change for the Royal Bank or for the TD Bank, both trading below the lower channel line yesterday, but not closing below it. So still waiting for sell signals for the Royal Bank and the TD Bank. Okay, folks, that's all I wanted to cover in this morning's presentation. If you've got kids, it's probably a good day to just take the day off and go out and play with your kids in the snow. It's really nice and fluffy out there right now. And of course, once the salters and sanders get to the snow, it's going to start to mess things up. But that hasn't happened so far. So get it while you can. And the next time you'll hear my voice is on Sunday. And if you're not a member, next time you'll hear my voice is on Monday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theyuptrend.com.